before we start the discussion, please, I would ask you to introduce yourself and your companies. You can start.
Yeah, thank you. So, Krijn Bouwman, CEO and co-founder of Roxys. So, Roxys focus on the autonomous mobility industry. And we realized very early on that when you want to scale autonomous mobility, you have to fix the infrastructure because the infrastructure is built from the assumption that there is a driver behind the wheel, for example, when you want to charge or clean a vehicle. So we built a platform to solve that gap, basically.
Mm-hmm. Thank you. David?
Well, first of all, thanks for having me and looking forward to the discussion. I'm David Ordonez. I'm an investor at the NATO Innovation Fund. We're a €1 billion fund investing in deep tech across Europe from seed to Series B.
Thank you.
Nice to meet you all. Simone Navizzari from Join Capital. I'm principal part of an investment team. Join is a deep tech fund based out of Germany, which invests across Europe in what we call, let's say, dual use and strategic technologies, seed to Series A, normally leading, also co-leading, almost never following.
Thank you. Now I understand when you said that you cannot hear very well on that part.
You cannot hear me?
I can hear, but... Okay, so the concept that comes frequently in the context is European tech sovereignty, but it can mean different things in practice. So, Simone, let's start with you. Join Capital focuses on technologies that are fundamental to Europe's industrial and geopolitical resilience. In practical terms, what does Europe tech sovereignty mean for founders building deep tech companies today?
Yeah, it's a very excellent question, and resilience is becoming now like a buzzword, like AI, like deep tech. So I can give you, I'm happy to share my personal interpretation of that. I like to look at it as a pyramid, a sort of Maslow pyramid, and the idea is to sustain the society. Now, what you need to have at the bottom, in my view, is energy. So if you're building something in energy, then you are in the right spot to be resilient, because without that, there is nothing on top. On top of it, I would place industrial production, being semiconductor or metals or whatever you want to, let's say, heavy industry production, because without that layer, you cannot build anything on top. And you, like nowadays, you heard about AI everywhere. AI runs in data center, which runs on chips, which needs energy. If you don't have those components, forget about AI. And on top of that, then I will put what I call critical infrastructure, which is, for example, communications, payment system. You pay every day with the phones, and behind that, there is a network that runs on infrastructure, which is not always owned by Europe. So think about that. Tomorrow, you can lose your payment system. What you're going to do. And so above that, there is everything else. So if you are in this layer, you are in the critical infrastructure. What I would avoid as a founder is to come to me, because it happened with, for example, a food delivery company, say, I am dual use, critical infrastructure, and say, like, what? I can deliver food to the front line. Yeah, maybe that's not exactly what I mean with critical infrastructure and resilience.
Thank you. And sovereignty is not just about what gets built, but it's also about how it's funded and supported. So, David, from the NATO Innovation Fund's perspective, how can public and private capital better align to ensure that strategically important technologies are both developed and retained within Europe? Your opinion on that, please.
I mean, I think right now they're much more aligned than what they were before, but it is very important to bridge these two walls, especially for the things that might appear like they're important, but no one wants to take the responsibility to actually develop it. So that's actually part of the reason why the NATO Innovation Fund was created, right? To try to bridge that gap between what is a sovereign capability and a sovereign need with the capital markets. In this case, we're playing within the VC space. And so that you have a little bit more context, the NATO Innovation Fund was funded by 24 sovereign nations of the NATO alliance that decided to put their money behind a mission of making sure that companies can be created here, they can scale here, and most importantly, they can stay here to grow. So essentially, it is very important when we work with companies to make sure that, there's at the end of the line, there is a public customer, for example, or a large institution that is able to commit capital to these companies to lower the profile risk that these companies have, and therefore make it more attractive to some of the private investors that might see some of the investments in deep tech as extremely high risk, when in reality also have high rewards. But they have this concept that, this is a government type of endeavor that we are not going to go into. So these two need to go hand in hand. We're very aligned now because we see all of the geopolitical tensions around the world, and it just means that we're going to be able to aggregate more capital. I think in the future is going to come with also larger tickets for both parties on the public and private side. So it's not only going after one same objective, it's also making sure that the capital is on par.
Yeah, thank you. And that brings us to the question of scaling, because building deep tech companies require a kind of different approach to capital. So, David, a question again for you. Why is traditional venture capital sometimes insufficient, and what alternative financing models should Europe embrace to scale such companies?
Yeah, I mean, it's true that deep tech is a different beast, and there's always this concept, right, of, oh, deep tech takes a lot of time, it's very difficult. It's true, it's difficult, but at the same time, we're also seeing these days that companies within Europe, all of the European deep tech unicorns, they're reaching unicorn valuation much faster than regular tech companies. Then they're generating more returns than regular companies, and they're doing that in the same time frame, right? So I think there's a misconception on this deep tech asset class that we need to push back, essentially. But I agree on the fact that these companies need to be financed in a different way, right? Because the funding journey is very different to other companies. And so we need to start using mechanisms, especially at the growth stage, which is where Europe struggles. Fortunately, now we have a lot of funds that are being raised to fix this. This year also we'll have the Scale Up Europe Fund, which precisely tackles this funding gap. But I think the new instruments that we need to look for go beyond equity, right? Because we need to make sure that these companies that scale, they can access to venture debt, they secure offset agreements, they have things like customer financing or project financing, and that's at the crux of the change of paradigm that we need to have in order to scale these companies within deep tech. And I think everyone in the ecosystem, both investors, companies, venture lenders, etc., they just need to get more comfortable with using it more. Otherwise, we will not be able to scale it with equity alone. So there's a lot to unpack, but essentially we need to evolve from the traditional model that we had.
Thank you. And Simon, how venture firms like Join Capital adapting their investment strategies to support founders through these capital-intensive scaling phases?
In our case, we're currently fundraising our next fund, and we are doubling the size of the fund from 100 to 200 million, roughly speaking, keeping the same number of companies, which means that we have double allocation in terms of capital per company. We are aware that, let's say, deep tech, it's normally capital intensive. It requires more capital, and that's one way to fix the issue or approach differently. The other is changing the risk profile. If you compare US VC with Europe VC, there is a huge gap in risk appetite, and we have to be, let's say, this is a fact, so let's go into that direction, because otherwise we will never close the gap.
Okay. At the end, it's not just about building or funding these technologies, it's also about deploying them at scale. So let's bring your perspective, Krijn. Roxys is enabling, as you said, hands-free charging for electronic vehicles and autonomous fleets. What are the biggest challenges in moving from technological innovation to city-scale deployment, and how interoperability and infrastructure readiness influence the rollout of robotaxis and autonomous logistics?
If you want to scale autonomous vehicles, the business case needs to be positive. It needs to be very competitive against other solutions. And the market needs to be huge because the investments are massive, basically. But if you look over the lifetime of an autonomous vehicle fleet, actually service operations is the majority of the cost. So in order to be viable, competitive, and scale, you need to be super efficient on your services because it's the majority of your cost over the lifetime. So yeah, that's of course where we are focused as Roxys. We want autonomy to not only be on the road, but we want autonomy not to stop at the depot. So we're building a platform to automate depot processes, charging the vehicles, inspecting, cleaning, etc. And it's crucial for viability, but also in the end, it's all about cost per mile. And cost per mile increases the TAM. So if you can go lower and lower on the cost per mile, you make the options more available for a wider audience. There are quite a few underserved populations who do not have the mobility they could have. And as the cost per mile goes down, basically your market size increases and you can offer more benefits to society. So it's all about basically creating super efficient service operations. That's the key for scale in multiple cities.
Thank you. But what is also very important is the coordination across the technology, infrastructure, and regulation. So I will ask each of you, what role should investors and policymakers play in accelerating the real-world adoption of such infrastructure? Maybe you can start, Craig.
Yeah, I think, of course, from the investment side, invest into infrastructure. From the policy side, I think for autonomous vehicles, specifically our case, regulation comes into play if you're allowed to put an autonomous vehicle on the road. In the US, they largely solved that question, in China as well. So you see it scaling there. In Europe, not yet. London is the first, actually. So from this year onward, slowly but steadily, and 2027 it will scale in this region. But it's all about creating the legislative framework for allowing autonomous vehicles on the road. So I think for policymakers, I think that would be my recommendation. This is a technology which is going to be a geopolitical topic for sure. Geopolitical consequences if you are not on the train. So better make it happen here.
Yeah, exactly. Thank you. David, your thoughts?
Yeah, I mean, these actors play a critical role, right, in the industry. And so from the investment side, both private and public, I think one of the roles that we need to take is that of an actor that makes concentrated bets. So Europe has a history of spraying money very thinly into multiple things. That's perfect to fund science, and this is something that we need to continue to do because it's the backbone of this continent, but it's not how we create some of the leading industries. So we need to make sure that we are comfortable with doing concentrated bets in winners, and I think the private sector is doing it. The public sector still is not comfortable with it. On the policy side, I think we just need to regulate much less. I think that would be a good step forward. And most importantly, to Simone's point, we just need to be more risk-prone, right? You've said it. Now Tesla is approved in the Netherlands. That comes after years where in China and the US, they've been driving autonomously for a long time. You know, when these industries are transformative, you have enough data, there's no reason to move that slow, especially when the potential benefits outweigh all of the small negatives that you will find in the short term. So we need to be much more comfortable with risk.
Thank you. Simone?
Yeah, so from my perspective, so from an investor perspective, like I said and reiterate the message, investors should take more risk, going more into, let's say, US mindset. So investing more capital in more risky bets that, like David said, more transformative. That's fundamental. And from policy perspective, I would say a couple of things. Number one, again, from fund perspective, unleash the capital that is sitting in pension fund, which is almost untapped in Europe versus US, and possibly incentivize pension fund to invest in European funds because most of them then, when invest, they do invest in US. This is not helping the ecosystem. The second point, again, on policy making is recognizing that over-regulation is killing industry. And this is true for huge corporation. It's even more true for startup. The only thing startup has is speed. If you slow down due to regulation or over-regulation startups, you're just killing the market.
Okay. Thank you. I'm just looking at the time, so I will skip some of the questions. But looking ahead to 2030, what, on your opinion, what will define Europe's next deep tech champion?
So I think like urgency and ambition. I think we have been a bit too modest in Europe. I think the mindset of the champion will be, we're going to build a company that is going to buy Google. I think that's got to be the mindset. And we should stop being too modest, just go.
Okay, thank you.
Buy Google.
Let's go.
I think for me, I always think in the framework that any company that is able to take the amazing science and R&D that we have in the continent and commercialize it into a product that solves a real world problem, that's going to be a generational company that we're going to see in Europe. Problem is that to go from here to here, they need to, navigate a bunch of scenarios where there's lack of funding or the funding is not going to the right places and so on. So I'm very excited about the things that we can do. And right now we're doing it in absolutely hard mode. And so I can't wait for the end of the decade when possibly, especially for the founders side, they're doing it in hard mode. I think the VCs also are in hard mode when it comes to fundraising and navigating some of the regulations in Europe. So I really want to see a 2030 where we're playing in an easy mode and we can achieve the things that we have here to unlock much easier.
Yeah, thank you. Simon?
I don't have a crystal ball, so it's difficult to say. Otherwise, I wouldn't be here, probably on an island somewhere. But there are a couple of sectors where I do see a lot of talents, know-how, and also history or industry that can support. One is definitely space. Europe has still strong industry in space. Because don't forget, it's okay to talk about startups, but few startups go to IPO. Most of them got acquired. You need to have the acquirer in the country, Europe as a whole, if you want to keep the technology here. And there are not so many industries that we have strong. One is that. And the second, we have a huge potential and know-how in quantum. So I really think that we are in a strong position compared to, I wouldn't say on top, but at least on par with US and maybe China. We have this opportunity, let's take it and not lose it again, like we did in the past with computing. Computing was born here in UK, not in US. Now tell me why everything happens in US and not in UK.
Yeah, okay, thank you. So let's end on the practical note. One quick thought from each of you. If you could change, although you already somehow maybe answered, but if you could change one policy tomorrow to accelerate deep tech deployment in Europe, what would it be?
Yeah, for me, like legislation on autonomous vehicles, just make it scale here.
Yeah, thank you.
A magic policy that deletes all of the old policy and rewrites it for the modern world.
Okay,
like we need to update it. If it doesn't work, why would we keep it?
Exactly, Simon.
Yeah, I think we are on the same page. I would say, let's say, deregulate and specifically scrap the AI Act.
Yeah.
Okay, thank you very much for a thoughtful discussion. What stands out is that building Europe's next deep tech champions isn't just about breakthrough innovation, it's also about aligning capital, policy, and real-world deployments. So please join me in thanking our panelists. Thank you.